Hey gang, the stock market's been showing explosive volatility over the past few months. That's right, we've been having historic up moves and down moves. There's just no sign of clear market direction. So the question is, how do you trade a two-sided market with strong volatility? Well, the answer is, imagine for a minute that you can isolate only the strongest sector and only the weakest sector in the S&P 500. That would give you a major advantage, right? Well, that's what you're going to learn in today's video. And by the way, this is just the tip of the iceberg. I created a 90-minute class that'll give you clear step-by-step instructions on how to trade sector rotations. Don't miss out and register below this video. Now, let's go to the lab and let me show you how to trade volatility. All right, we're back in the lab, and in today's tutorial, we're going to talk about how to trade two-sided markets with sector ETFs. In this example, you can see the 10 major sector ETFs inside the S&P 500. Now, what we want to do is we want to isolate the strongest ones and we want to isolate the weakest ones so that we can buy the strongest ones, sell the weakest ones, and avoid everything in between. In this example, you can see all of the 10 major sectors. It's actually broken down into 11 sectors because communication services and information technology for some reason is broken down into two. Usually it's just one sector, but it is what it is and we can deal with 11 sectors as well. So what this example tells you is what percentage of stocks is trading above the moving average for each sector. So the higher the number, the stronger the sector. So for example, if we look at materials and the 20-day moving average, we see that 68% of material stocks are trading above the 20-day moving average. Same thing with financials. Over 73% of financial stocks are trading above the 20-day moving average. That means those sectors are gaining strength. If you look at the real estate sector, you'll see that only 3.12% of the stocks are trading above the 20-day moving average. So that's a sector that you would sell. You can buy puts to take advantage of that sector. While if you're trading materials, basic materials, you would buy a call to take advantage of that sector. So there's a way to take advantage of the long side and the short side. So you don't have to be a slave to the stock market. You can buy sectors like the material sectors with calls, and you can buy puts for sectors like the real estate sector. So you can profit from the strong sectors and profit from the weak sectors and leave everything in between. And also keep in mind, if you want to learn more about this topic, I'm holding a special class that'll take a deep dive into sector rotation. And I'm going to go from A to Z into isolating only the strongest and weakest sectors to help you make big profits consistently. So don't forget to sign up below this video. I'm really excited about that. Now, let's continue. Take a look at this rotation cluster. This rotation cluster returned 11.5% in only 2 weeks. That's 10 trading sessions. Now, we only bought calls. We bought the health sector, the real estate sector, and the technology sector. Those sectors were showing the strongest potential for gains. So in this 2-week cycle, we decided to stay away from puts and only focus on call options because the market was strong. As you can see in this example, this cluster returned 56.5% in only 2 weeks. There were 4 total ETFs. 3 of them we went long and 1 we went short. So how do we do? We started with $9,635 and we ended with $15,080, all in 10 days. And we were able to achieve 56.5% gains because we were able to isolate the strongest and the weakest sector. That's the most important thing you need to do when you're trading sectors. You don't need to be a slave to the overall stock market. And as most of you know, we're coming off a brutal 2018, especially for traders who only held long positions. The normally steady S&P 500 had drawdowns of over 13%, while the alpha rotation stayed below 3% drawdown through all the hectic market conditions. And better yet, while many were losing their shirts, my alpha rotation trades were knocking out profits of 23.7%, 56.5%, and 31.2% in consecutive 2-week rotations. Now, I'm holding a class to give you all the details of how this strategy works, including an opportunity to get my alpha trades delivered personally from me. Just use the link below to access the class right away.